Hi, this is Dan Collins from the Dan Collins Report, and this morning I want to talk to you a little bit about economic reports and trading on the economic reports. The first rule, of course, is not to trade on the economic reports. You have a position going to unemployment or CPI or the GDP number. If it comes out wildly outside of expectations, it can really cause a huge spike in the market. But being flat in the market is not always an option, so there's a few things you need to know about the economic reports. One is, it's not whether the number is good or bad, it's where the number is relative to expectations. Now, the Wall Street Journal on their website has lists what the current expectations of a report is, and there are several other services. You should look at them all, and you should look at them really near on that day or the night before the report, because it does change. For example, the July unemployment report just came out, and the day before now the ADP report came out, where the ADP numbers were more positive, but that probably affected the market's expectations for the unemployment report. And another important thing, especially with the unemployment report, is there are so many dynamics to it. It was a bad number that came out early in August about the July report, but the actual headline number, the unemployment rate, dropped from 7.6 to 7.4%. Usually that takes a huge positive increase in non-farm payrolls. But because the denominator, the number of people looking for work, has been very slow and dropping because of the recession, sometimes they're decoupled. Often the market, some people in the market can look at the quick headline number and not all the underlying numbers. So one, know where expectations are, and also know expectations of all the components of the number, where they think the rate's going to be, how many non-farm payrolls there are going to be. And with unemployment, there's some really gems in there, the lower components that you have to look at. Several years ago when I worked on the floor, you could look at the hourly earnings, and people would look at that movement and see it as a gauge of inflation. For a while, it was even kind of followed more than the CPI itself. And these things change. So when you're looking at economic reports, you have to know the expectations. You have to follow that, because certain reports gain or lower eyes on them. Sometimes they're very important, sometimes they're not. In the early 90s, the trade balance was huge. Every time that trade balance went up, it was very negative for the market. After a while, people didn't look at it so much. So it's important to follow where expectations are and to determine how much the market itself is following each number. Like I said, you want to be out of the market when this comes in, but you can't always. So when they come out, look at all the components, know where all the components are going to be. And these numbers come in and out of favor in terms of their level of importance. Unemployment will always be important. So will the weekly claims that go up to it. Sometimes people are looking at that. Look at the different components of the economic reports. If possible, be flat and look at the preponderance of analysis as to what the market expectations of that number is. Do not trade, don't have a large position going into the number, but know where everything is at. Sometimes the market will spike right on the number because someone looks at just one component of it. So don't react to any number until you look at all the different components and get a whole picture. You're going to add one thing on that. The Fed auctions that come out later in the day is the same thing. If you follow the markets for any time, you remember how the Fed auctions would usually have a whipsaw. It would have an initial reaction, and then the market would reverse based on it, and that's people looking at a little bit in depth into the numbers. So don't react to a number until you see all the components. Be careful when trading economic reports. The important thing is that you know what the market is expecting. This has been Dan Collins for Traders Exclusive. See me on the Dan Collins Report. Thank you.